Welcome to Trade the Opening Gap with the German DAX. My name is Ryan Watson. I'll be presenting today an overview on how I trade DAX gap. A brief introduction as to who I am and my trading experience. I currently live in Australia with my family and have been trading full-time since 2009. I'm originally from Canada. It was there that I earned undergraduate and graduate degrees in business and where I started my career in the banking and financial services industry. After several years in Canada, in 1995 I was asked by the company that I was working for at the time to make a move to the UK, and there I spent the next 15 years working in the city and the Docklands for a number of financial services organizations. After a successful career working in the great city of London, but unfortunately still too young to retire, I uprooted the family for a change of life and we moved down under to sunnier climes, and this is where I'm continuing my passion for trading. My trading is systematic in nature and has been focused on short-term mean reverting strategies, usually about 1 to 5 days in duration, on the markets, the DAX, the stocks, and the S&P 500. And it's on these markets that the instrument that I trade is solely the futures. My experience with trading the gap actually started with the S&P 500. I gravitated towards trading the gap with the DAX and the stocks markets in the start of 2010. I spent close to a year creating my system for these markets, trading small size during this period, but started trading larger size positions in 2011 when I realized that there was a genuine opportunity. I had found very little information on the internet on how to trade the opening gap on the DAX, and it was towards the end of 2014 that I decided to create a website that was solely focused on the opportunity that is available using my gap strategy on the DAX. And it's through readers' emails and the stats that are available on WordPress that I'm happy to have found that this style of trading is indeed popular. I urge listeners to continue with your questions, and I'll help out the best that I can. The email address is daxgaptrading@gmail.com. And with that, let's get started. Please take a moment and read the disclaimer. Past results are not necessarily indicative of future results. As you know, there's a high degree of risk in trading. The material in this presentation is intended for educational purposes, but it can be used as a good point to start your own independent research. So what will we be covering in this presentation? The first thing we'll be taking a look at is a brief overview of what is a gap. Then we'll look at some of the gap statistics and why I think that DAX gap trading has a unique opportunity. How I do the executions, the entries, the exits, the stops, targets, and gap sizes. I found that entering directly at the 9 o'clock is not necessarily the best way to go. Next, we'll be taking a look in depth as to how I created my gap system. We'll be looking at the 3 components of the system: the market environment, seasonality, and patterns. And then finally some other considerations such as the pre-market price action, various miscellaneous items to consider on the day. And I'll be looking at each of the sections relating to the daily posts. And then we'll be wrapping it up with a summary and covering why I think that selection is the key criteria with DAX gap trading. So with that, let's get started. Let's spend a moment and have a brief explanation as to what is a gap. So a price gap occurs when a security's price jumps between 2 trading periods. This is the difference between the security's opening price and yesterday's closing price. And a gap creates an open space on a price chart. It's very visually conspicuous, especially if it's going to be a large gap. For the purposes of what we're going to be looking at with this picture, this example, we're going to be using the cash index session time open at 9 o'clock and the close at 17:30 Central European time. So on day 1, the futures closed at 92.02 at 17:30. At some point during the evening there was some bullish sentiment in the market, such that on day 2 the futures opening at 9 o'clock was 92.61. And this is called a gap up. During day 2, the regular session time, price sold off and it filled the gap at the day 1 closing price of 92.02. And if you had taken a short trade, this would have resulted in 59 points of profit if the short had been entered at the 9 o'clock open price of 92.61. On the previous slide, we saw two candles, yesterday's candle and today's candle, and how a trade worked out. What we're looking at here is the top section of the daily posts. Now, assuming that today's 9 o'clock open hasn't started yet, we're now only going to be having one candle to take a look at, and that is yesterday's candle. And I'm going to be pointing out in this particular section that we're looking to short a gap up, but between two price levels of 94.91 up to 95.59, and we're targeting the actual prior day's close at 94.61. So I just wanted to show as a reference again how we're going to be using the candle from yesterday to make a trade decision. Further information can be found on the website under the section heading Gaps Explained in Education. For the purposes of the presentation, all the information on the presentation and in the website will be using the FDAX continuous futures contract as traded on the Eurex exchange. My preference is for using the futures, and anyone else that's using any other type of instrument such as a CFD will not have exactly the values that I will have as shown on the site. So, but if you are going to be using in futures, which I suggest people do because I prefer the fact that it's based on a regulated exchange, commission costs are reasonable at roughly €4 round trip per contract, and for me this has always been the way to go. It is a big contract. It's €25 a point, and for those that have some experience trading the DAX can move around quite a bit. So the historical data that I use from my provider starts in 2003. All the information I'm going to be showing you includes the commission but not the slippage. As we can see on the information provided below, taking all trades since 2003 is a break-even strategy. But the key thing is the win rate. A 71% win rate is quite high. The question then becomes, how do you avoid as many of the losers as possible, as the winners should ultimately be taking care of themselves. All the information that you're going to be seeing is from a data perspective is based off of TradeStation, which is my executing broker, and I use it for my charting and my coding as well. I highly recommend them. I think they're a decent enough. So how do I execute my trades? Well, first of all, for the purposes of the presentation, an entry at 9 o'clock is going to be assumed, with an exit when either the stop or the target is hit. And if this doesn't occur, an exit at the 17:30 cash market close will happen. I never hold past 17:30. So the actual futures contracts start trading at 8 o'clock and they finish at 2200. But the cash index, the DAX cash index, operates from 9 to 17:30. It's during this period that there's the highest level of liquidity and price action. Now, there will be times when taking a trade pre-market or a few minutes after the open is advantageous. This will be covered in each day's post. So I have found that entering up to 15 minutes earlier can be beneficial with some setups. So that would be at 8:45 before the 9 o'clock open. My experience has found that approximately 15 to 20 minutes before the actual open, you will frequently see some larger size traders coming in and look to close that gap before the 9 o'clock open. So you want to get in there when you can to make sure that you get that profit, not such that price at 9 o'clock ends up sitting right on yesterday's close. I have mentioned that entering with a market order at 9 o'clock can be quite disastrous for this particular strategy. The DAX futures itself is an instrument which does not have a lot of volume or liquidity. And if you're used to be trading the S&P 500 or the stocks, you'll end up seeing in excess of 1,000 contracts on the bid and the offer. In DAX, what you'll frequently find is less than 10 or 20 contracts. So entering directly at 9 o'clock can incur some quite significant slippage. So what I have learned is I will sit with a limit order, and it can be up to you, but 5 minutes, 4 minutes, 3 minutes, whatever that price is on the particular minute, it's the minute that you should be using every single day. Sit there with that limit order at whatever that, if the bid or the offer happens to be, which direction you're going to be trading for the day, and wait. And wait for it. Let's say you're doing it 5 minutes before, just let it sit there. If you get filled, great. There's not a lot of difference between an 8:55 fill and a 9 o'clock fill from an overall strategy perspective, but you will be saving on the slippage. If you do that and you don't get filled, and it's 1 minute before the actual open, start to chase it. So start to move your limit order up to the latest bid or the offer. The vast majority of the times, using that particular way, you're going to get hit, you're going to get a fill, and you're not going to have to worry about a 9 o'clock open where you could get anywhere from, I've seen 3 to 7 points of slippage using market orders. There will also be times when I will enter after the 9 o'clock open, and that is usually only in situations where I'm looking for a minimum risk return reward on a particular trade. And if price ends up opening up where my reward is not going to be significant enough given the risk that I'm taking, I'll wait up to 10 minutes for a retrace back to that minimum price that I'm looking for. Now all that's stated in the daily posts. So if you hit 9:10, I just cancel the whole trade. If the gap ends up being filled, I cancel the trade. So there are instances where you can actually wait until after the open for an entry. Okay, let's look at stops, targets, and gap size. For these calculations, I use a volatility-based measure, and in those instances where I'm looking at an additional profit beyond gap fill, so not directly at gap fill, I will also use a volatility-based measure. Now, I don't find that using one particular stop level or one particular gap size is going to be useful because of the fact that volatility does change from a day-to-day basis, and you should be looking to react to that volatility appropriately. So I've used the indicator, the average true range. It was popularized by a trader psychologist by the name of Brett Steenbarger in his research with trading gaps on the US equity markets. For those that aren't sure what an ATR is or how it's calculated, you can take a look at online. There's a lot of different trading sources out there that discuss it, Wikipedia being one of them. I use an ATR look back window of 5 days. I find that short enough for the gap trade, and it does provide some smoothing as well. Now, when I say I use strictly an ATR value, that's not entirely true, because I will actually cap my stop at usually about 75, maybe 80 points. And when we're looking at high volatility periods, and we're looking at low volatility periods, I'm looking at 25 points. So the ATR is really, it's used as a fluctuation between 25 up to 75 points. Okay, the optimization testing that I've done has indicated that stops generally do not help performance. There's a lot of evidence on the internet to suggest that, but of course with the use of leverage and using futures, you really do need to have some kind of stop level in place. My DAX gap testing results have come up with 40% of the 5-day average true range for the gap size and for the stop value. And interestingly enough, the 40% value has also been verified with Steenbarger's own gap research, my own research on the US based equity market. So what we have is we have the DAX and we have US markets both supporting similar values, and when you have this provides additional confirmation that the optimized values are not necessarily merely a product of overfitting. If you go onto the website in the special reports section, there is a report there called Stops, Gap Sizes, and Targets. It goes into more detail, and it also shows some of the optimization reports that I've done. As soon as you enter a trade, you do need to immediately place the stops and the targets. This is a strategy that allows you to not stare at the screen, so it's a bit of a fire and forget. If you don't have a platform which has an auto closeout functionality at 1730, you do need to remember that you have to close out your position if the stop or the target is not hit. My experience is that more than 90% of all trades will hit the stop or target before the 1730 market close. I should also mention that if you're using a broker with respect to your stops and your targets, you really should ensure that the broker has those stops and targets sitting on their platform and not on your computer. You'll have to ask them if where it's sitting. If you ever have your computer go down or the power goes out in your house or whatever, you're going to have a naked open position. All of my orders with, like I said, are executing brokers with TradeStation. They sit on the TradeStation servers, and if anything does happen with my computer, I know there's not a problem for having an open position. And so unless otherwise stated, the remainder of this presentation will also be using the gap size and targets based on the 40% of the 5-day ATR, with the target being directly at gap fill. Now there will be instances when larger gaps can be taken and beyond targets beyond gap fill are optimum, but for the purposes of the presentation, these are the core values that we'll be looking at. The DAX gap trading system that I've created is made up of three principal components: market environment, seasonality, and patterns. I will be going over in more detail each of these three components in the coming slides, but they're key in the creation of 8 key setups, and each of these setups has a mix of the three components. And each day's post will cover one or more of the setups if there's an opportunity on the day, and that day's post will frequently actually reference the specific component. And if there is no setup triggering, a post will highlight the risks with taking a trade. If you want to get into more detail about each of the three components, you can go to the website under the special reports, and you can take a look at moving averages, seasonal factors, consolidation of volatility as an example of what is in each of these components. The first component that we'll be taking a look at is the market environment, and on the site it is a measure of sentiment, and it's been classed as either a short or long-term bear or bull market. A short-term bull market is using the widely followed 10-period simple moving average. Longer term is the 200. And gap trading is often referred to as mean reverting. This type of trading operates best in a volatile condition, and I have found that when we are in a short-term or a long-term bear market, so yesterday's close is under one of these MAs, that is when DAX gap really shines under those types of volatile conditions. In each day's post, we'll actually make reference of the short-term market environment, and occasionally we'll mention the long-term. The second component of my gap trading system is seasonality. The term seasonality is used on the site as a reference to the calendar, as well as the release of miscellaneous economic reports or other high-impact trading events. So frequently when people think of seasonality, they're thinking of the weather. And if you're a trader, your minds might turn to the commodity products such as wheat, soybeans, or corn. However, seasonal influences do have an impact when trading the equity markets. So for example, if we look at the day of the week, we'll have a Monday where you have traders coming into work. They're looking at the previous week's market action and they're planning for the new week. Now this will behave differently than a Friday where you could have traders looking to close out short positions or take long positions or just be flat before the weekend. The day of the month, you could be looking at the end of the month where you have traditional bullish buying as institutions are coming along into the market. The month itself can have an impact, whereas I find the autumn months are decent for both long and shorts with taking a DAX gap trade. We have some other high impact trading events such as options expiration, various German report releases such as the ZEW, the IFO, the PMI. We have the US report releases such as the unemployment report and the Fed funds rate setting, which also has an impact on trading DAX gap. Now, these last high impact trading events are not directly built into the system per se, but they will be referenced in the daily post if it's going to be impacting the day's DAX gap trade. You can refer to the website under the section heading Special Reports. There are a number of various reports there that you can take a look at and see how these aspects of seasonality can impact the trading session when looking at a DAX gap trade. I'd like to discuss the third component of the gap system. It's patterns. The term patterns on the site is used to highlight or reference unique price action that can provide an edge when gap trading. So an example of abnormal price action would be where you have yesterday's candle having broken out of the last several days trading range on an increase in volatility. This can provide a very good edge when trading towards the gap. If we have a situation where yesterday's candle has consolidated within the last several days and it's on decreasing volatility, that can be problematic for identifying a setup that is actually going to fill the gap for that day. So this section of the website entitled Education examines the impact of gaps that have not filled yesterday and how today's odds improved when trading the gap. So for example, if yesterday ended as an unfilled down gap, the odds are very good for today's gap filling. Previously, unfilled up gaps were good up until 2012, but it has subsequently been difficult and have struggled. I'm also looking at using a number of popular indicators such as the RSI or the %R, and they're helpful in determining when a price has become stretched. And this improves the odds for today's gap filling because what you have is the reversion to the mean as price is snapping back to fill the gap. And under those types of situations, I've found that today's move may have additional momentum, and in those particular instances where you have price stretch, you can actually be taking a look at a target beyond gap fill to squeeze out some additional profit. Further information again can be found on the website under the section heading Special Reports. There's two there that discuss overbought and oversold indicators, and another report called Consolidation and Volatility. I'd like to take the time to discuss some other considerations before taking a DAX gap trade. One of them is the pre-market price action. So the DAX future trades for 1 hour before the cash index opens, so between 8 and 9 o'clock. An analysis of that pre-market price action can provide some valuable clues as to how the 9 o'clock open will trade towards gap fill. I will frequently use this information when I have a trade set up that is what I term borderline. And a borderline trade setup might be because we have some sort of poor seasonal or an economic report that is making the trade a little less desirable. An example of favorable pre-market price action would be when the pre-market trades above or below yesterday's close and then opens in the opposite direction at the 9 o'clock open. This can generate a very strong signal. I've found that the win rates are frequently in excess of 90%, but these wins are quite small in terms of opportunity, and the occasional large loss can wipe out a large series of small wins. So in these situations, I have found that a tighter stop can be utilized, and I will, due to the high win rate, frequently accept a smaller risk-reward outcome when taking these trades. And similar to the daily analysis, I have found that the pre-market candle direction and volatility can be important when assessing this time frame. So further information can be found on the website, again under the section heading Special Reports, 2 reports, Pre-Market Price Action and Pre-Market Price Action Part 2. Another consideration is what risk reward you're willing to take, and I found that that's both a personal as well as having efficiency considerations when taking the DAX gap trade. When I first started trading DAX gap, I was looking for a high risk return, but I found that I was leaving a large amount of profit on the table. So lowering reward meant a psychological adjustment of having a high probability trade ending with a potentially large loss. And I found through optimization testing and personal considerations, it determined that risking €1 to make 40 cents is a decent risk reward trade-off. What you decide to choose is up to you. I will put what the system is going to be doing. The system is not constrained by a minimum risk reward and will take all trades if a setup triggers, even if that means it's only 1 point. So that's not to say that I won't take a trade if at the 9 o'clock open my minimum risk reward entry price has not been met. I will occasionally place a limit order at the risk reward entry price and wait for up to 10 minutes for a fill. However, such an approach will miss out on those trades that head directly for gap fill. I don't like waiting past 10 minutes. I have found through testing that long-term profitability does diminish. But you should be aware that such a strategy of entering after the 9 o'clock open is guaranteed to catch all the losers and will miss out some winners. Another consideration I think it's worth mentioning again is the risk of entering with market orders directly at the 9 o'clock open due to large slippage, which can result in anywhere from, I've seen, from 3 to 7 points, and can negate much of the trading profit opportunity that is available in trading DAX gap. So try entering anywhere up to 5 minutes before the 9 o'clock open with limit orders. If you don't get filled, you can chase the price anywhere from 1 minute right up to the 9 o'clock open with a limit order. The key is to enter at the same time every time, and not say today I'm going to enter 5 minutes before, tomorrow I'm going to enter 3 minutes before with the limit order. Always go in at the same time and then only chase perhaps in the last 1 minute before the 9 o'clock open. And again, that will save you on the slippage due to the liquidity issues with trading the DAX future. To reiterate, I have found that stops do hurt performance, and that's one of the challenges with trading DAX gap, is utilizing a stop that will allow for the trade to work out while defining your risk reward and determining the amount of leverage that trading futures allows for. However, my testing has shown that while stops do hurt performance in the long run by not allowing the trade opportunity to work out to its fullest potential, I have found that using the ATR based volatility stop takes into consideration recent price action, but there is an understanding that a stop will on occasion take me out of what would have been a winning trade. This is a price that needs to be paid if you're going to take advantage of using leverage futures. And finally, another consideration that you need to be considering on the day is how much risk should you be taking. And I think this is always going to be a personal decision. On this site, I have mentioned what I use, which is trading one DAX futures contract per 100,000 euros, which is roughly 2.5 times leverage. If you take a look at the system performance Excel sheet, you'll get an idea of the historical drawdowns. A conservative approach could be to double the drawdown amount and determine if this is a number that you're comfortable with. At the time of this presentation, the largest 2015 drawdown was 6,500 euros. If, say, you were to double this to 13,000, is this a number that you're comfortable with if you're going to be trading 50,000 euros per futures contract or 100,000? On this slide, I'm going to be covering what the daily posts are going to be looking at. There's 3 sections. The first section is a quick snapshot view of the parameter values of the stop, the size of the gap, and the target for today's trade opportunity, and it utilizes yesterday's candle as a pictorial display. So here we've got we're gapping up and we're shorting between 94.91 up to 95.69. Now that provides 30 points of opportunity if the target is 94.61. That 30 points is if we were to take the minimum entry price of 94.91. Now the stop is 75 points, so 30 into 75, and that's where we're looking at a minimum risk reward of 40 cents. Just under the picture you can see that this is the FDAX December futures contract candle at 29th of September, trading from 9 to 17:30. So this was the candle that you'd be looking at on the 30th, and that's the price range that you're going to be looking at for the 9 o'clock open to take this trade on the short side. Section 2, the system equity curve, discusses in a simple language the code values that were used to create the historic equity curve. Analysis is broken down into positive and negative factors that contribute to a trade decision. Sometimes factors are of interest due to a specific event or price pattern that is unique to today's trade opportunity, or they are highlighting a part of the system which is particularly strong today. The positive factor listed here is highlighting the fact that the seasonal, day of week, day of month, and month are all favorable for shorts today. And frequently I will include the link to a special report so you can click through and review the particular piece of information. The final section, number 3, is the summary section, and it is what I am planning on doing for the day, what the system will be doing, and any additional pertinent information. So here I have, if the 9 o'clock open is less than the minimum risk reward, I will wait for up to 10 minutes with a limit order entry, which we talked about. I will not wait past 9:10, or if the gap fills and the trade is cancelled. I'm also mentioning the fact that of the last 54 wins with this setup, there were 4 trades that required a stop greater than the proposed stop of 75 points. So I'd mention that I cap my stop at 75. Now, aggressive traders may wish to enter on this particular day at less than the minimum risk reward price of 94.91. These types of small gaps have a very high probability of filling, and in this particular instance the last 36 trades in a row had been winners. I also make the suggestion that if you're going to be doing this, that you could take a smaller stop of 40 to 50 points. This should provide enough room for the trade to work out. And I also make mention of the fact that the system will trigger a signal on any gap up today and target gap fill, and is not restricted by risk reward requirements. Now, a gap up that is greater than 95.61, 95.69 would be a large gap up and has a decent chance of filling. But as you can see, the sample size is small, is only 22, and the win rate is in the 50%, so it's not that great, and it's not something that I would be considering taking. This presentation has highlighted how I trade DAX Gap, which is based on over 5 years of research in real money trading. Don't be deceived by the high win rate percentage that is available when trading DAX Gap, as taking all the trades is essentially a losing strategy when you factor in commission, slippage, execution errors, etc. Trade selection is the main driver when trading DAX Gap, as the key is avoiding the losers and picking the highest possible risk-reward trade opportunities that's available. While there are over 200 trading days in a year, there are probably only 50 to 60 times a year that you'd actually want to place capital at risk. The information provided on the site is an excellent starting point for you to explore gap trading and how it applies to the DAX market. I'm sure you've heard this before, but start small size trading and ensure that you create a plan. Don't be afraid to take it slow and get a feel for the strategy in the DAX market, as experience only comes with time. I hope you have found this video helpful in understanding how I trade DAX Gap. If you have any questions, I can be contacted at daxgaptrading@gmail.com. Thanks for your time today.